Hello, this is Jordan. This video is being recorded on the evening of Sunday, January 22nd, 2023. Thank you so much for joining me. And in this video, I'm going to give a few thoughts on the weekly outlook for gold and silver and some key levels as we move forward. And it looks to me like we are coming to the end of this rebound and this initial move in gold and silver. And the reason I say that is silver continues to lag, and we'll get to the miners, but last week the miners, they basically slowed down with their outperformance against gold. So these signals are telling us that the market is, losing some strength, and then obviously as it moves, as it's been able to grind higher in recent weeks, you get to higher levels, more supply, more resistance is going to come into play. So looking at gold closed the week just below 1930. So it was able to take out the 1900 to 1920 resistance range. And so at this point, it looks like gold is probably going to be able to continue up to 1950 or 1960. So that would be the first guess as to where this move could end. But at the same time, one could look at what has happened and think that gold is going to be able to run past that resistance. And maybe this move peaks at 2000 or maybe it gets even closer to those twin highs, above 2050 or so. But those are basically the key levels. I mean, starting off, we have 1950, 1960. A pretty good chance that could be tested this week, unless some big reversal comes in the next day or two. So I'm expecting that to get hit. Now, obviously I'm looking ahead, but thinking about a potential correction in gold and silver, I talked about this in a different video. All the long-term moving averages, they're coming into play around 1800. You can see the 200-day in this chart, it's flattening out just below 1790. Looking at lateral support, 1830, that's been a very significant level over the last 12 months or so. It was a very significant level around the time before the Russian invasion of Ukraine. Also, if we're looking at Fibonacci levels, I believe 1835, 1840 is the 50% retracement of the entire cyclical bear market. So that's a significant level. Basically, if we're going to see a sustained correction, that's a key level that I would look at. And by the way, there's also, if you look at the thumbnail there at the top right, you can see there's an open gap around 1825. So gold is going to have strong support around 1800. Those moving averages are going to continue to rise. And in addition to that, from 1825 to 1835, those are significant levels. And again, on the upside, 1950 to 1960, that's the next resistance. Now down to silver, it's just been the same story in all these videos. Silver, it looks like, if we're just looking at silver in a vacuum, well, this is a bullish consolidation. It's flagging here, with respect to the last, month and a half. But that has come in the context of gold gaining over $100 an ounce. So at that point, or given that, I don't know if we can say how bullish that is. But, who knows? Maybe silver, there's going to be enough juice left in gold. If my guess would be if gold is able to go above 1950 or 1960, maybe that drags silver finally above 24.50, and then silver can come up to $26 an ounce. As gold gets really close to testing those old highs. But at this point, if the gold peak is at 1950, then I don't know how much higher silver is going to move from here. Look at the bottom right, you can see the gold-silver ratio. Gold has been outperforming in the last month, obviously. Another thing is commodities. If you're looking at commodity indices, they're starting to look weaker. And so if we see another move lower in inflation expectations and we see bond yields really coming down, there's greater concern about economic weakness. Commodities come down with bond yields. That's an environment where we're going to see gold even outperform silver by a higher degree. So that's also, potentially short-term negative for silver. As for the stocks here, looking at, if we focus at the bottom two, SILJ does have some upside to our targets there in the low to mid 12s. Looking at GDXJ, 42 has been our target all along. It's not quite there yet, but there's some room to move there. Looking at GDX, I think a couple videos ago we noted 33, 34 as key levels. So maybe GDX at 34 and GDXJ at 42. Those could be interim peaks potentially. And again, for SILJ, maybe in the low to mid 12s. But, with that being said, I don't know if I've talked about it in a video. I've talked about it in premium updates and I think in my last editorial. But we shouldn't expect a really big correction here in miners. Unless you get a run like you had from late 2008 into 2009, or unless the miners have rebounded 100%, the corrections tend to be limited to around 15% at that point. And we know with miners, that can happen easily in 3 or 4 days. So with that being said, and at the same time, looking at gold, we mentioned those support levels around 1825 to 1835 and, the strong support that's coming in around 1800. Even if gold, well, let's say it peaks at 1960 and it comes back to 1800, that's, that's, what would that be? $160. So that's not a 10%. What is that? 8% correction. So I guess, based on history and based on levels, that's what I'm thinking about if we're going to see precious metals pause. That's it for the video. I prefer to keep them shorter like this one and not ramble on for another 5 more minutes. Let me know what you think, and I'll see you guys again in the next video.